Well, here we go again. And good morning, everybody, and welcome to the pre-market rundown for TriggerCharts for February 7th on 2020. Hopefully everybody had a great week. Sorry we couldn't be here last week, but we did have some things we needed to complete. We are ready to rock today, though. I hope you are, too. We're going to talk about a lot of things related to the markets as well as some of the technical indicators, things that we really need to be focusing in on and watching very closely right now. We did see a jobs number today. We're going to talk about that and a lot more. Before we get any further, I want to mention that this is just for educational purposes only. It is not a recommendation to buy or sell any security of any kind, of any nature. So remember, educational purposes only. All of the TriggerCharts indicators are available exclusively on the trading app store for TradeStation. So make sure to do that. And by the way, I'll put a little link in the comments on the chat. Did you know that you can actually fund an account with as little as, I think, $500. It's not a commercial necessarily, but I'm letting you know. You can fund an account with $500 and basically get free access to the entire platform for TradeStation, and then you can add our indicators in as well. So it's pretty much a no-brainer because the platform is now free and information on the quotes is free, and pretty much you're just putting $500 in an account. Of course, you do want to trade it because you want to profit and make money, but it's easy if you haven't done it so far to get that going. All right, so we did discuss this disclaimer. I'm going to close that right now so everybody does understand that and talk about where we are right now. Well, we went from a situation of, I would say, all fear to now we went to, well, we're all clear. This coronavirus situation, that was an outbreak in China that started out as a small item back as far back as I think the beginning of January, maybe even into December 2019, spread very quickly inside of China. And then what happened is it obviously expanded to other countries where now cruise ships are being quarantined. 50 million people in China are being quarantined. Markets freaked out. This is going to create a major amount of drag on the global economy. As a matter of fact, recently there were estimates of about 0.5% of total global growth will be removed from markets due to the coronavirus. And that's if it did, in fact, solve and get eradicated relatively quickly. It seems to be continuing to go on. And somewhere in the commentary of all these problems and all the worries, markets said, well, the hell with that. We're getting back to business. We're going to start buying again. We saw that incredible snapback. I think the Dow is up close to, I don't know, about 1,000 points this week after taking a couple of really bad days last week. So people are looking at what they believe is the fundamentals of companies, and a lot of companies yet have come out with anything to do with their concerns and outlook, and maybe even their dropping of their outlook of earnings because of this. So we really haven't seen a lot of that yet. But markets are basically disregarding the virus. They're saying, you know, we're good to go. We're going to keep on buying in until we hear otherwise. China, in the meantime, is pretty much shut down. I don't know, 14 countries around the world have pretty much banned any travel into or out of the country, and various provinces are shut down. Every district in China has some infection. I think the infection rate is right now at 30 or 35,500 or so deaths. And now we're seeing, like I said, a ship off of New Jersey is quarantined right now with the concern that there is a person on that boat with the coronavirus. So big problems, maybe, not life-shattering in terms of the markets long-term. It could be transitory or temporary, but there are some issues that we need to contend with. I will tell you this, and hear me when I say this now. This is not over. Markets, I think, have said, well, China provided an incredible amount of stimulus. The Fed's going to be backing up. Our jobs numbers look good. Our growth numbers look good. Those are all backward looking. The fact is that even though we did see a good amount of opportunity to get that bounce from severely, I would say, in a very quickly oversold market condition, this is not over by any means. And again, I told you last time when we talked that I would expect that into the weekend, there would probably be, I would say, some red on the Friday, especially if we're going to consolidate and digest some of the gains that we saw this week. So we had the buy the dip going on. Earnings season. A couple of notes on this. Overall better outlook that have come from many companies. And again, this is up until the point of where they started to see any kind of contagion on their earnings from this coronavirus outbreak. And right now, we did see that companies are coming in and beating, as they usually do. 75% or so of companies beat on earnings, and revenues are coming in a little bit better. That's all good. There was some optimism that really sparked after the trade deal was signed, even though we know pretty much not much changed. The only thing that changed was a slight reduction in tariffs on a certain tranche of imports from China. China this week reciprocated and took about $75 billion worth of goods that were tariffed at 15% and put them at 7.5%. Now, what's interesting is that they did it on soybeans, they did it on pork, and they did it on auto parts. Things that they need, obviously, and areas that are a big concern because of the lockdown in China and the inability to do intra-country trade and manufacturing, and business is pretty much shut down. We saw that the casinos in Macau, Wynn, Las Vegas Sands, Melco, they're all shut down for an extra 2 weeks at least to prevent the spread. We're seeing that there's some concern about the potential border crossing even from Hong Kong into China now. So again, this is a big concern. They are really trying to get this locked down. And we are seeing some strange things out of the country about some of the people that are reporting on this, some citizen reporting that's going on. We're seeing that the people that are reporting mysteriously disappeared 2 weeks ago. So they're trying to keep a control of this, and more so they're trying to keep the public safe, but at the same time a little bit, well, I would say confident that they are going to make sure that business will be as usual. We'll see how that plays out. I'm not sure what your thoughts on it. I will tell you that, again, I don't think this is over. It is far from over. And depending on how this actually comes to other countries, and more so what the mortality rate is on this, is going to be a big issue. So we see that earnings season, again, a little bit of better outlook up until the point of where we're getting any of the information about this coronavirus. We're seeing choppy and mixed depending on the sector. Some areas have snapped back pretty nicely. We saw the technology reaching all-time highs. Well, the S&P and the Dow reached all-time highs yesterday. But we see that technology is still winning, and you're gaining a lot of supporters, but there was a little bit of a mixed bag with that as well. But even so, even if companies have missed, investors are willing to keep on pouring money into them. Manufacturing, really interesting. The manufacturing number, which was under the 50 level, which is a demarcation point between contraction and expansion, got over the 50 mark last week. And what that means is that it is an expansion once again after 7 months in the contraction zone. So pretty important to look at. Services remain in expansion as well. About 55 was the print on that. And of course, today the jobs numbers came out. And we're seeing an incredible amount of confidence in the jobs market. About 225,000 were added to the payrolls. 158,000 was the expected number today. The unemployment rate did tick up from 3.5 to 3.6%. And there is a huge revision that's going on right now due to the household survey. They do this revision every so often. And this is the month they're doing some revision. Expectations were for about 500,000 jobs that were in fact put on over the last year are going to be taken off overall from the totals going backwards due to the model they use for the birth and death rate of companies, as well as just statistical anomalies that they'll be putting up. Something I want to announce, this is really cool. I don't know if anybody knows, a great technical analyst, Brian Shannon. He has something that he utilizes and he really has polished pretty well. It's called the Anchored VWAP. I'm going to show you that today, but it is live, ready to go over on the trading app store over on TradeStation. Fresh, hot, version 1. Actually, we're going to do an update to this already, but version 1 is live, working perfectly. And what you get is, as you can see in the chart down here, what you get is a, I want to kind of pull up my annotations here, which I don't seem to have. There we go. What you have in this is 3 lines. See the 3 lines? Those are 3 different VWAPs you can put on any chart from any point of time that you desire. And Brian Shannon goes to talk about this really at length and discussing how when you look at major events, it's really good. Now, we're distributing it for him because we think it works really nicely along with some of our volume-weighted products as well, and the strategies that allow you to pinpoint where investors are laying their money as we talk about each and every week. So a pretty cool situation there. and we will close that. Let's go down a little bit now. What's moving markets this week? Well, we went from oversold to overbought in a way. Not terribly overbought, but a little bit. But definitely we got down to a -4 on the KRI, which we'll look at. Let's see if we can pull that up here. The KRI, you can see right about here, the key reversal indicator did give us a nice, about a 3.5. I much prefer when we hit these -4 levels and we get the clusters or the little green dots that tell us that, hey, this is a time that looks really ripe to start thinking about in getting there. We saw the getting there on the buy side. We saw that we got overbought a little bit on the top here. Nothing terrible. We did see that drop down, and that was really more of a news item. Then we got oversold, and it kicked right back up. So pretty interesting that we did see the KRI well position you from a socially and psychology and a technically based indicator that, again, does one thing only, just gives you on the broad-based indices the psychology of the markets where they are at this point. What do we have? Oh, central banks continue to stimulate. We know that the $25 billion was pumped in by the Fed last week into the repo market. We see that China is dropping their triple R rate. They are actually doing a infusion or an injection of, I think it was $200 billion into the markets last week. And we saw the Philippines dropping their rates, even though inflation is climbing. And this is going on around the world. So it's very much constructive processing for people that are bullish on the central bank thesis. Again, we have some new headwinds. We've talked about those. Next week, retail sales. That's a little spelling error. Retail sales, industrial production, and University of Michigan confidence index. We're going to talk about Tesla. We got to talk about Tesla. A lot of movement this week. There's a classic chart pattern that developed with Tesla this week. It's obvious when you look at it. We're going to look at Canadian Goose. Oil clearly having some difficulty. We see that copper on the right side here had this major lose streak, like 11 days in a row, moved down, and then popped back up, starting to cave in a little bit on the concerns that this is not over, that China's shutdown may be more permanent. And obviously China is a good and copper is a really good reflection of manufacturing activity. What else do we have here? We talk about the SPY. Pinterest came out with some earnings up sharply now. Space, we've been talking about this for a while. Just a nice pattern on the chart that keeps on continuing. And IBM breaking out of multi-year consolidation. So before we go anywhere, I'm going to kind of click on this area. This is just what we call the anchored VWAP. Just going to show you very quickly, and we're going to just use the SPY as an example. You can use it on any time frame you want. Basically, all you do is something like this. Pick an area that there was a key reversal or a key event that happened. And this is all explained in the instructions and the tutorials that are out there. But basically, what you do is you will click this and you'll get a VWAP. And usually when you have a sloping VWAP higher, that means that's constructive to the buy side. Also acts as support and resistance levels. So we can kind of put a few of these on the charts. Simply click. And you can see when you actually, we're going to move this one over. You can just kind of adjust that at any point. So you can keep those on the chart, move them any point, and you can put VWAPs on a chart, volume weighted average price. And that combines really well with our other indicators, because when you see there's a convergence of levels, that's an interesting support or resistance area. So you can check that out over at, I'm going to put that back in the chat for you, at the Trading App Store for TriggerCharts over on the TradeStation Trading App Store. But you can do this very easily and then just clear them, just take them off and just reposition them if you want from any point on the chart, and utilize that very easily. Just clicking away, just clicking away. And again, where do you click? That's the big question, right? Where do you click? Well, that's all explained, and Brian Shannon does an incredible amount of webinars and training on the anchored VWAP. So we worked with him in a venture to make this happen and get this available for you. But let's take a look at some of the more traditional things that we like to look at. And I want to kind of take, I think Tesla, we just have to really focus in on this. And I'm going to blow this up just a little bit here. And I want to focus in. I mean, if you look at Tesla, what do you see here? You know, we see this daily chart. Actually, you know what? Let's go really crazy here. I want to show you something that we had a flat movement and a consolidation holding support for a long time. There's a weekly chart on Tesla, and then we get this breakout above, and we get this bar right here, a blow off top. Very classic, very, I would say easy to spot, but when you're involved in it, not so easy to spot and is concerning. I mean, this stock went from 670 to 968 in about 3 days. And then it came down. Right now, trading down about $10. Went down as low as, like I said, 673 for the week. So let's take a look at this, though, on a daily basis. And we can see that we had this kind of small bars. You see the small candles. They're not very wide. And they move, and then you get this huge move on a daily basis from a range of about 678 up to 777. Gapped up the next day above 800. Moved all the way to 960. This is a classic blow off top where people are freaking out and like, I have to get in. We saw this with Bitcoin. This is the same look as a Bitcoin chart. You know, people say, all right, I give up. Shorts say, you know what, I'm done. And this classic blow off top of Tesla was a great sign. The question is the timing. The range of the movement was so incredible. Where would you get in? The fact is that where you would have got in probably was when the reversal happened, the close down below the high into the lower third and approximately lower half, we'll call it, of this. It was clearly a opportunity to short. So you could get in somewhere about 800, let's call it, on the close of this day. And the reality was we did see this big drop yesterday down to about, what is the low here? 700. It was as low as 680 or so, or 690 in the pre-market yesterday. And then continued down, did recover some of it yesterday up to the top here. We did see a little bit of recovery. Tried to really pick up towards the 800 once again, failed. And we're once again, even though you did continue to see a little bit of support, I think this is going to be potentially down to about, we'll call it let's call it round number 600. Okay, a round number 600. We're going to put this on the chart for future use. What is it, 586? So let's put it right above there. Just to say that's where I would see support on Tesla. So yeah, Tesla looks like is a short. However, one thing to note, that Tesla right now has this enormous range. So you're going to be playing the consolidation between the top here, 882, down to the level here, which is 582, which you don't see the green. So that means at 582, there's some significant support at that level. So Tesla, interesting place. Goose, let's go to Goose. Trading up today, actually trading down, trading down today. Canadian Goose, we're going to go here. I want to show you something that is really interesting on Canadian Goose. I think this bears some warning sign. You did see that the aileron, which is a momentum indicator, since the mid part of December has not been cooperating very well. And that coincides to the fact that you've gotten some great short calls that happen with the autopilot. Once the autopilot changes from yellow to red, you got a confirmed signal on that. And what that means is that there is resistance above, or I'll say something different. When you're below the line, when you're below the green line, it's do not be long. When you're above the red line, do not be short. That's kind of a little way to look. We also look at the look left, from right to left, always talking about that. But then we add in the momentum indicator on top of all this, and there's really not much that goes in to say that this is anything that's going to see a great forward upside opportunity like we saw when it started getting into this range here, where we clearly had a change of character all the way back in September. And what happened there was that there was a move to the upside on this and pretty much a banger. Right? We went from below the zero. We got the zero line. We held support. We got a banger right here. And that coincides pretty much to, we'll kind of look at this right about there. So we got the aileron that went above zero finally for some time, above the zero line, and support and a call to the long side. That would have taken you from about 38.43, and you would have gotten out somewhere right about here. And then turned into a short, actually. Would have gotten out about 43 and change. And then the pattern kind of reversed and did some choppiness, but a couple different times went back and forth, back and forth. This could be another upside opportunity here if we did see the last ones work out so well. But frankly, I don't see it that way. I see this is the continuation of a pattern that is very weak and a stock that has very little momentum. It would take a lot to change this because you have a tremendous amount, I would say, of overall resistance because you have this entire range right here of clusters and altimeters and areas, and we could even kind of put on a few other things, put like a radar on here, and you can see there's a lot of resistance inside of all these areas. A lot of area you need to get above before you have any clear sailing, which is probably 45. So unless you want to take this for a contra trade, okay, but I don't see it. Just don't see it. What do we got next? We got SPY. So SPY, and let's take off the radar here. Radar gives us a more granular look of the volume profile, the market profile that gives us really very refined look at where we are in terms of the buyers and sellers. What we do with that is we take that, break that down, use another algorithm with a swing, and then put that into play for our altimeter, which then further is utilized by the autopilot to give you opportunities. Now we saw that there was some great momentum that went in from December, kind of dropped off in February. You had a short that got you in on a short signal, closed you out pretty much an even Steven, give or take maybe 50 cents. Went back to a long right now over the top. Right now there is very little to go by because we're at an all-time high. So when you're at an all-time high, there's really, when you look left, there's no resistance at all. So any good news, any market algos that are really going to be on the buy side are going to push this thing higher without any real significant resistance. However, with that in mind, that makes it much harder to play. I would rather look for places that I can find areas of interest, whereas we have holes, or we have gaps, or we have zones that we call will enable you to see where you have the potential for price to move horizontally or vertically. Horizontally or vertically. Horizontally is a consolidation. Vertically is usually fast through time. That's what we want to find. We want to start to see these horizontal, long-term areas of price consolidation that all of a sudden break, where there's an opportunity. When we look left, there's not much going on there. And then when they break, usually they do a fast break through time, like we have here. Pinterest, currently up 17% today. Look at this. We see some consolidation and all these little islands of consolidation. So we saw a consolidation and we saw the price move horizontally through time from 23 to 21 over a period of about 20 days, right? Approximately 20 days or 18 days. And then what happened right now, currently trading at 27.11. So right about, we'll make another line just to benchmark this. 27.11. Trading right about there right now. But what is it that you see here? Well, the important thing that we're looking at right now is above this level, clearly to that point right there at about 26, there's nothing when we look left. There's a gap. There's definitely a bunch of consolidation that moves up, but for whatever reason, we're able to move beyond that. I would say that if we can get above the level of about, what do we got here? This is right at about 28.5. You got another area that is the potential that goes back pretty far of an area of nothingness, a hole, where the price can move once again vertically through time very quickly. So keep an eye on Pinterest, whether you like it or not, it's okay. Space, Virgin Galactic, got a little bit of a kind of a similar look to Tesla here with that kind of blow off, but not as great by any means. But it's holding support pretty well. We had that nice run up, that move. We talked about that way back here at about, right when it broke off at about 11. I think it was probably at the end of the year, right? So it was about 11. Currently trading at about 18 and change. You know, if you get above that 1850 level again, if you can get pushed up above that, you have the opportunity for this thing to really have some legs and move. One of the things I do like about this is that we are seeing a consistency in the aileron. The aileron is showing us that there is above the line continuing, above the zero line. And that is consistent with the fact that we've held this, and we just actually got out of this on a trade if you would have been long since about the $11 level to about 18 and change. Right now in a consolidation zone, 1693. Look at the support. I mean, look at this. Let's zoom in on this if I can. I can't. I'm trying. There we go. Zoom in. Look at this great support in this area here, right about 1611 or so, and the 1685, right where aileron shows support. You know, a couple of cents either side, but basically supporting, then blasting back off. So I think there's a great opportunity if, in fact, we can get above the next level here of about 1950. Clearly, the next time you're going to see some opportunity because more times it tries to break through a particular level. Either one or two things are going to happen. It's going to fail miserably, or it's going to take off incredibly in either direction. What else we got? IBM. Yeah, IBM. Look at this. This is really kind of interesting. We got to look back on this, actually. We got to look back on this on a weekly basis, IBM. You know, going back on IBM and looking at this all over time, and you look at, once again, this range it's had, and we'll kind of draw it right in here. I mean, since October, if we go back further in time also, you know, we've seen a range of anywhere from about 170 or so. Right now, we're hitting right inside this level right here, right? And that is an area that there is some congestion, some consolidation from the past that you need to look at. So when you look at this, I think it's really important to recognize that there is some topping endpoint. CEO stepped down, Gina Rametti, after a number of years, and new CEOs coming in. The Red Hat CEO from the company that was acquired recently is coming in as president. And this is shaping up that there's going to be another, this is going to look like Microsoft when Steve Ballmer stepped down. And I'm not sure it's really there. I don't know if we're going to get to that point. There's a lot of competition. They're very late in the game. But we are seeing a nice move by IBM, and particularly if we look at when all this happened recently. So this is kind of needs to be put on, I think. And again, you look at this. It just once it got above this on a daily chart, 345. Look back here. I mean, going back to August. I mean, 145, not 345. 145. Got some good legs on it. Some of those companies that are really the most affected and impacted by the coronavirus is the metals and the companies like copper. So Freeport-McMoRan had a major downstroke from about 13 and change down to 11. That's pretty ugly. Tried to recover this week with all stocks. We looked at that support down about 10 and change. So what do we get? Well, we got it right there. Look at that. We got the support right on when we kind of put the line across. I encourage you to do that. We had multiple levels going across from right to left that were, in fact, supportive levels for that. Alcoa, you know, not much going on, like multi-year lows. There's a chart from back to 17. It's not looking so good. I don't know what's going on here. If you want to play this as a reversal candidate, maybe. And you got some room up to about maybe, I would say, right about the 17 level. But Alcoa, not the greatest thing I've ever seen in terms of how a stock is looking and how it's behaving. And a lot of that has to do with the global slowdown. And if we continue on with the global slowdown narrative that's going on, you're going to see these stocks in the commodity area as well have a problem. Crude oil, I want to look at that one for a second. Trading down about 1% today to right about the 50. 50-51 seems to be a pretty key area here. 49.84, I don't know what that is, but 51 seems to be a key area. They keep on seeing pop, and I don't know why exactly. I mean, we can go back. I don't know why that seems to be an area of interest, but it is. We see that crude is, you know, really in bad shape right now. And again, this is because of the fact that a lot of people are saying that China is just not producing, not working, not manufacturing, not doing any business, not transporting, and that is piling up a lot of oil reserves. In addition to that, a lack of the airlines flying is causing a problem for that as well. So just something to take a look at. Just a reminder before we end, check out the VWAP. There's a 10-day free trial over on the TradeStation trading app store. I put that link into the chat several times. This will be available, like all of our webinars, on our Twitter, well, put it through Twitter, but also through our YouTube channel and on TriggerCharts.com. I want to thank you for joining me, and we are pretty much out of time. So I will see you again next week.